Yes.
The broadcast is now starting. All attendees are in listen-only mode.
Ladies and gentlemen, good morning and good afternoon. This is Ben Coleman, Business Development Manager here at Disability Insurance Services. I would like to welcome you to another Wednesday webinar. We thank you kindly for taking the time out of your busy schedules and busy days to meet with us and get some new training, education, and some sales ideas through our Wednesday webinars. Today's another very special webinar. If you're not already aware, May is Disability Awareness Month. And so for this month, we have presented two brand new webinars to you that are going to help you gain some sales ideas and further educate you on disability insurance and our industry. The first one we did was a marketing boot camp that was very well received, and today is another brand new one, very special. It's going to be Association Endorsement, disability insurance training by providing association endorsements. And I'm very happy to have on the line with me today the President and CEO of Disability Insurance, Dan Steenerson, who has been in the industry for over 30 years and founded DIS 14 years ago. So he will be conducting the presentation. Before we get started, I do want to let you know that you cannot hear us, or excuse me, we cannot hear you. You can only hear us. So if there are any questions in regards to the presentation, do not hesitate to type them into the question box on the right-hand side of your screen, and we will do our best at the end of the presentation to answer as many as we can. So without further ado, I would like to turn it over to the President, Dan Steenerson. Dan, take it away.
Ben, thank you very much. Good job. And again, I would echo Ben's sentiment. Good morning, good afternoon, ladies and gentlemen. Thank you for taking time out of your busy schedule to learn more about something that could be very important to your clients. You know, we don't know who's going to be disabled. We know people get disabled every single day. And the odds are stacked against us in terms of being disabled versus dying. And you never know who that person is going to be. The actuaries tell us out of 1,000 people, they know how many will be disabled and for how long on the average, but we just don't know who it's going to be. We try to look at applications that are submitted to us from the brokers that we do business with as though that could be a potential claim someday, and to treat that with the urgency that it requires. As such, I would encourage you to look at your clients as their exposure to risk and potentially becoming so sick or hurt that they could never go back to work. And in order to help make that point to your clients, I would challenge you to replace the words with disability insurance with paycheck protection. It seems to be something that the buying public understands. They can't understand or see themselves actually rolling up to the grocery store and parking in one of the blue parking stalls with blue placard hanging off their rearview mirror, but they can see the need to have their paycheck protected. Well, that being said, let's move on to a wonderful, wonderful sales idea or sales entree in the professional marketplace, and that is association endorsements. Here's what we're going to cover today, folks. I want you to know that disability is more common than you think, and I'm going to show you some statistics that bear that out. We're going to cover how to find clients and offer those clients savings on their disability policy with association endorsements. We'll talk about what is needed for an association endorsement. One targeted segment of that is the resident and hospital discounts or hospital endorsements. And then, of course, the association endorsement prospects in general. Well, first and foremost, yes, disability is more common than you would think. It can happen to anyone. Here's 3 stats with sources. First of all, the Social Security Administration in their 2007 fact sheet points out that 3 in 10 working Americans will experience a long-term disability during their working years. Second stat, every 30 seconds, someone files for bankruptcy in the wake of a serious illness. It's reported on the Washington Post. And of course, this third bullet point, you can have a lot of fun with this. You know, when in this game of sales, it's all about broaching subject matter, isn't it? It's all about finding a prospect that has a need with a solution that you can provide. And this third bullet point here really speaks well to that. And you can have fun by asking your prospects and clients, hey, can you tell me what the biggest minority is in America today? And nobody is going to say it's the disabled, but folks, that is a true statistic. According to the 2006 Bureau of Census, over 51 million Americans are classified as disabled. Well, did you know that there are many Americans out there that are disabled, but to look at them, you wouldn't think that they were disabled, although their doctor says they can't perform the duties of their job, and therefore they're collecting, they may be potentially collecting some type of paycheck protection, either by an agent that sold them coverage, or through their employer, or through the Social Security Administration, which, by the way, today the average claim is taking 2 years to get processed through the Social Security Administration. And of those folks that are fortunate enough to be paid a benefit after 2 years, that only represents about 30% of all the filed claims with the Social Security. So it's really a false sense of hope if you have a client that thinks, well, the Social Security will take care of me. It's a tough road to hoe. Okay, well, let's move along here. Association Endorsement, DI. Okay. DI policies with an association are discounted for the client. DI sales are going to multiply because now you've got a pool. It's like a pond. You're fishing in a small pond, and you've got promotion from the association, and you've got a direct promotion from yourselves from the standpoint of marketing to these individuals. So it's a ready pool of folks that need disability insurance that you can go to with a sense of credibility due to the fact that you're endorsed by that association. And of course, the more people you can talk to about disability, the more you can promote that product, the more commissions that you're going to make. And by the way, while we're on the subject of commissions, very early in my career, I started, I don't know, I was 23 years old, and I had many of the older agents in their mid to late 50s, early 60s that would tell me, gee, Dan, if I could start all over again, I would sell a greater share of disability insurance. And I always was very curious about that. And they would tell me that, yeah, we love the renewals. The renewals can be anywhere from 5 to 15%, and that's like an annuity to us. And so I got to wondering about that. I contacted the LIMRA, Life Insurance Marketing Research Association, and I wanted to know how long did the average DI policy stay on the books versus life insurance. And they told me that first, the good news, and that is DI's, the disability insurance policy's average persistency is 12.2 years, which means to me that those old timers that were telling me when I was 23 years old, the reason why they would sell DI is because they knew that they could count on that renewal stream of income year in, year out for over greater than a decade. Well, on the life side, LIMRA told me it was only 6 years on the average. And that's term insurance, folks, not permanent. So I thought to myself, gee, what a wonderful product to sell, not only the first year commission, which could be quite sizable, but also the recurring commission that I could earn on this policy, or my brokers could earn on this policy over the course of a decade. Good reason to sell DI. Commissions are high. Commissions persist. Well, let's talk about some special association member benefits. You know, the members are eligible to receive a special premium discount. And remember, this discount is available to all the members of the association once the carrier approves that association. The policy cannot be canceled as long as the premiums are paid on time. So remember, it is a non-cancelable policy. Nothing changes. The provisions don't change. The premiums don't change. And quite honestly, it's a solid gold disability policy that we would sell to, that we would recommend that you would sell to your top-end clients. Number 3, the policy is portable. They can take it with them wherever they go. Let's see, number 4, the coverage is available up to age 66, 67. The reason why there's 2 different dates there depends on how old the client is. The official retirement age for somebody that is in maybe their mid to late 40s is going to be 66. Somebody that's in their 30s, their government's recognized retirement age is going to be 67. And of course, lastly, the coverage is 24/7. It's not just at work like workers' comp, and it's not just like off the job like state disability. It's both of those put together, 24 hours a day. And you know what? The fact of the matter is that's what you want, because most disabilities are going to happen at home. Well, let's talk about additional options to association members. If the member is a business owner, there's also the BOE, or the Business Overhead Expense Policy, that's available to them on a discounted basis. It's designed to reimburse the client for continuing overhead business expenses during the disability, such as the leases of the equipment, the building, the employee salaries, employee benefits, telephone, fax machine, office supplies, any expense that business owner has on a monthly basis in order to keep his business open. And as I say, it keeps the business operating until the client is ready to be an active participant again. Number two, the question is raised, does the business owner have a partner? Because the discount is also available to those that are members of the association that have partners and are interested in buying a disability buyout policy. It ensures that buyout payments can be made to a disabled owner, allows the other owners to continue on with the business. Well, here's the criteria. The association has to have at least 100 members in it, and all members are in the same industry or profession. Now, one exception to this is that we do have a carrier that's willing to endorse a Chamber of Commerce. And as you and I know, the Chamber of Commerces around the country are going to have are going to be made up of various different businesses in different industries. And so there is a carrier out there that will provide that association endorsement. Most carriers want to stick with all members in that association being of the same profession, like a medical society or a bar association, or you know, a dental association, those types of professions. Number two, the association is established in a state or local profession, association formed for the purposes of promoting the profession, not for the purpose of promoting insurance per se, but to promote that profession. Associations connected solely with a place of employment, national associations, chambers of commerce, and ethnic, social, fraternal, and alumni groups are not eligible. And as I pointed out earlier, there is one exception, and that is the Chamber of Commerce. Okay, well, continuing on, the association has to have a constitution and bylaws. And the association has to have been in existence for a minimum of 2 years in order for the carrier to recognize that as a bona fide association that would be willing to endorse. Well, let's talk about the discount. Did you know that there are savings up to 47% off street, and that's for the females? Usually 10 to 15% for the males. And the reason why is because these association endorsements could potentially, not always, not in every state, and not with every carrier, but in some situations, could be gender neutral. We already know that the females pay more than males, unlike life insurance where the males pay more than females. And that's all because of risk. With life insurance, the mortality risk is much greater for males. In DI, the morbidity risk is much greater for females, up until about the age 52, 53, then it flips over to males. But prior to age 53, your females are going to pay more on a gender distinct basis. Well, under an association endorsement, you can make it gender neutral or unisex rates, to where the females drop down to where the males are. Of course, the males go up just a hair, and then what you do is you discount it another 10 to 15%, depending on the carrier you're working with, to go lower than that. And generally speaking, you're talking about a substantial amount of savings over the course of a career, right? And so here's where you can help the association membership where the association can't help them on their own. You can tell the association executive director that, look, we can make you look very benevolent in the eyes of your members and also interested in adding value to the membership of your association, because if your members tried to go out on their own through the yellow pages or through a friend or talk to any agent out there outside of the realm of this association endorsement, and they would be paying anywhere from 10 to 47% more because they didn't get that discount, and you're here to help them provide that discount to their members. Now you've got a conversation, folks. Now you've got an executive director at an association that would be very interested in wanting to know more about it, particularly when you get to the point in telling them that there's no cost to the association whatsoever. Okay? Not even any billing whatsoever. We bill the individual directly, or the carrier would bill them directly. But do understand that there are no special underwriting concessions made under an association endorsement. It's just purely a premium discount, which is quite significant unto itself. Now, that being said, depending on the carrier that we're working with, that carrier may have in place simplified underwriting guidelines or programs under their top-of-the-line contract that would allow the members of the association to be able to qualify for paycheck protection without having to jump through a lot of hoops. And what I mean by hoops, for those of you that have been out there selling disability insurance, you know it. I'll kid you not, it is the hardest policy, hardest concept to sell in the industry. But if you understand a couple secrets or a couple different ways to approach the market, it becomes simpler after each sale. But my point is this, is that there are carriers out there that do have some simplified programs in place that'll actually waive income documentation, health questions, attending physician statements, blood and urine, and so forth, up to a certain dollar amount. So bear in mind that even though there are no specific underwriting concessions for the association endorsement plans, there still may be simplified concessions that are available from these carriers. And the reason why, quite simply, it makes a lot of sense. Did you know that last year, the return on equity that was reported by Milliman and Robertson, they're the big actuarial firm in the Midwest that tracks all these DI carriers. Did you know that their return on equity was 15%? Folks, those carriers that are public, they need at least 15% to attract the investment community on Wall Street, right? That's what every carrier that trades across the big board, or every company that trades across the big board, needs and is shooting for in order to attract the investment community. Well, did you know not only was last year a 15% ROE for all these carriers, but the 2 previous years were over 20%? My point is that these carriers are making good money on this product line. They understand that it's a profitable market, unlike 15 years ago when the carriers were closing their books and leaving the marketplace. Today, they know that it's a wonderful product to add to their portfolio or to have in their portfolio. They're making money on it. And what does that mean? That means they're clamoring for market share. They're all clamoring. And what we're finding is a matter of leapfrogging from a benefit enhancement standpoint taking place amongst all the carriers. So, folks, when I say now, there's never been a better time to sell disability insurance, I mean it. These carriers, they can't get enough of it. And you know what? That's a good line. Write that down. That's a good line to ask your prospect. Ask them this question. Hey, when do you think is the best time to buy disability insurance? Do you think it's when you're first starting your career? Do you think it's after you're established? Do you think it's after you have a house, maybe a family, some kids? When's the best time to buy disability insurance? Well, the worst time to buy it, I'll give you a hint. The worst time to buy it is yesterday. And a better time to have bought it would have been the day before yesterday. Because yesterday you are older than you were the day before. And today's even worse than yesterday. The point being this is that the longer you wait to buy disability insurance, number one, the more exposed you are to risk. Number two, the more expensive it's going to be. Because, folks, this is permanent coverage. Wonderful, wonderful line. Write that down when you talk to your prospects. Tell them what we're talking about here is permanent coverage. Nobody can tell you that they're going to sell you health insurance that's permanent coverage, because health insurance goes up, doesn't it? It can go up every year. And you're here to say this will never go up. So the trick is lock and load it as early as you can, and it'll never go up through age 60, 65, 66, 67, depending on what the benefit period is. Another idea you might want to take into consideration when you're engaging in conversation. Again, in our game, guys, as salespeople, what we want to do is we want to be able to prick somebody's interest in something that we feel is a credible need and a solution to that need, and that's protecting someone's paycheck. Well, let's talk about going back to some of the requirements with Association DEI. Here's some of the producer requirements. First and foremost, getting into the nuts and bolts of this. You have to submit the following for association approval, together with your application. Okay, now your application is basically a 1 to 2 page application that the carrier would ask you to fill out. In other words, are there any other endorsed products in place? Who's the association? How big are they? How long have they been around? Those kinds of Q&As that the carrier wants to know about. You fill that out, you sign it, you send it in. No need for the association to see that form. It's basically showing the carrier how you're going to market to this association. And the carriers, I got to tell you, are very, very good in not making a real stringent set of rules that you've got to follow in order to market to these associations. Number 2, you're going to need a letter of confirmation from an authorized representative of the association identifying you as the producer, as primary sales representative, and the carrier as the authorized insurance carrier. So we do have sample letters that we can make available to you, and it's basically it's a letter that the association would sign saying, yes, we're going to endorse XYZ carrier, and we know that John Doe is our agent that's going to be representing that carrier to provide this product to our members. Now, I used a word in there that sometimes is objectionable to an association, and some of you probably already have guessed what that word is. It's the word endorsed. Word endorsed. I will tell you right now, I'm here to point out, the booby traps that are out there, and I'm here to tell you that some associations will say, you know what, we think that there's some implied liability if we sign a letter that says that we're going to endorse XYZ insurance company. We don't like that word. Well, the carriers don't have a problem with replacing that word, believe it or not, with another word or words such as make available. And I have yet to run into an association in the last 30 years that has said, we object to the word make available. So that's a wonderful substitution. We can, like I said, we can send you the sample letters. The sample letters will say endorsed on it, but we can wordsmith and swap out that with make available if that's, or if there's another word that's more appropriate for your particular association, the carriers are eager to work with you on that. So don't worry about that. The point on this slide here is that 2 things need to happen in order for you to get the association. Quite simply, a letter from the association saying, hey, we'll endorse you, and then number 2, you submitting a marketing plan, a 2-page form letter that would basically tell the carrier how you plan on going after this association from an field underwriting standpoint. Well, let's talk about target markets. Get a clear picture of the target markets that are out there. Industry or professional associations are wonderful target markets to go after. Associations having at least 100 members. Make it an established state or local professional association formed for the purpose of promoting a profession. Now, carriers today, and there's always the exception to the rule, but I will tell you, by and large, just about every carrier does not want to endorse a national association. And the reason for that is that they don't feel that they're going to get the participation percentage that they would be looking for, because it's difficult. If you're an agent, in Texas, how are you going to market to all of the members from California to New York down to Florida? It's very, very difficult. So the carriers want to stay on a state level as the largest body under these endorsements, if possible. Association has to have a constitution and bylaws. They want a legitimate association. Association has to be in existence for a minimum of 2 years in order to get the endorsement. Well, next steps. What you can do is you can request our free association endorsement power pack, which we'd be more than happy to send out to you. That'll give you an easy paint by numbers 1, 2, 3 approach to associations. It's the best way to break into what we consider a very lucrative market. We have association handouts, and then we also have a specific physician association handout. You know, the physician marketplace is tremendous. And, you know, some of you work in the physician marketplace. Others wouldn't touch it with a 10-foot pole. And that's fine, and that's good. You got to go with what works for you. But I got to tell you that the physician marketplace is so very, very lucrative. Physicians will buy the top-of-the-line solid gold coverage, including all of the riders, and they never drop it. Now, the exception to that is if a physician buys a small policy, maybe $1,000 or $2,000, my studies show that they're more apt to drop that policy or replace it. It's not generally a drop and forget. It's usually a replace, only because the benefits are not very high. And the reason I point this out is because it's the complete opposite behavior of, say, a blue-collar individual or a business owner. Those folks will hang on to those policies no matter what size they are. Physicians, for some reason or another, they'll replace a $1,000, $2,000 policy in a heartbeat for a $4,000 or a $5,000 policy. So, and that's generally the average premium with a physician is going to be about $4,500. So, you know, and then over the course of the 10 years, 10%, that's, you know, that's another $4,500 in your pocket in commissions, renewal commissions. But associations, physicians are a wonderful market to go after. And I think part of that, folks, is because they treat the sick, the hurt, the lame every single day. They see the risk. They know that you can get disabled. They know what it would take to knock them out of the saddle. And it really doesn't take much. Well, let's talk about a summary here. Special association member benefits. Members receive a special premium discount, as we've told you. They never lose that discount. The discount stays with them even if they discontinue their membership in the association. The policy cannot be canceled as long as the premiums are paid on time. It is a non-cancelable policy. Policy is portable, as I've already pointed out. It is available out to age 66, 67, and it's 24/7. It's not just at work. Other options that are available to the association member could be a discounted business overhead expense policy, or it could be a discounted buy-sell agreement. Those policies are also available. And you know, the fact of the matter is on those buy-sell policies, let me give you another sales idea. When you're sitting down with your business clients or your professionals, and they have a buy-sell document in force, why don't you ask them to take a look at the document? More than likely, you're going to rifle through there, and you're not going to see anything on disability insurance, or you're going to see a paragraph on there that's going to say disability buyout to follow, or what have you. And what you're generally going to find is a life insurance policy that's funding the life buyout. Well, what if the heart attack comes up short, and they don't die, but they become disabled? Well, what you want to do is you want to quantify reasons how you can help your clients. And in going through that process, you ask your client for a copy of the buy-sell. And when you read it and you see that it's not funded by a DI policy, here's the question you're going to ask. Write this down. You're going to say, I'm so happy to see that your lawyer drafted this. Some clients, they overlook a buy-sell agreement altogether. I applaud you. You've taken the step to address this real issue. But you're missing a page, and I'm wondering if you've got that, if you got the whole file here, or did a page fall out? And they're going to say, what are you talking about? And you're going to say, well, there's no page in here on disability insurance. There's a greater chance of you guys needing to execute this buyout agreement due to disability than there is due to life. You've got a life policy, but that's not the most critical need here. It's disability insurance. So don't forget that, folks. When you're sitting down and talking to your prospects and clients, ask them for a copy of that business buyout document and ask them, quote unquote, where's the missing page? So wonderful segue into discussing disability insurance. And up to that point, you could be talking about business insurance and not even bringing up the idea of insuring them for disability insurance. But that's your segue, right? That's what we're looking for. We're looking for bridge builders or question starters, segues to get into an intelligent, meaningful, and thoughtful discussion on something they need to protect their business and their livelihood. So use that. I've got brokers that use that all the time, and it makes a big difference in them helping their clients. Summary continued. Association criteria, remember, at least 100 members. Got to be established on a state or local basis. Got to have constitution and bylaws in existence for a minimum of 2 years. Special discount for association members only. Target market, industry, or professional associations, as I've already pointed out to you. The medical, the dental, the CPA, the engineer, the bar association. Those are great associations. We also have associations like Builders Association, the building industry, that are made up of engineers, architects, builders, and so on and so forth. Okay, so let's go back to what I started on, and that is the facts. You've got to build this sale on statistics, and here's the statistics. I mentioned to you about the buyout agreement, and the chances of being disabled are much greater for DI than there are being disabled due to disability than it is for dying. And here's a stat from the National Association of Insurance Commissioners. They say at age 32, the chance of being disabled for 90 days, get this, folks, at 32, it's 6.5% greater than the chance of death. Number two, 17%, or 1 out of 6, 17% of families experience a disability, according to the 2000 U.S. Census. So, without options such as an association discount, price objections could lose a sale for you, as well as leave your client's income unprotected. You know, here's another sales idea. Write this one down. And this is a statement that could be very easily made to the association executive director or to the prospect. And that is this. Here's a wonderful way to be able to buy wholesale versus retail. Everybody likes a deal. Everybody likes a sale. Everybody likes to save a couple bucks, particularly in the new financial environment that we're all in right now due to this protracted recession, right? So people are looking for ways to save a buck. Now, that being said, I want to tell you one other thing. I don't know why this is the case, and maybe it has something to do with the average producer not being very familiar with this product line, or the new producer not having the opportunity to be trained in disability insurance with their recruiting source, with the company that brought them into the business, because maybe that company doesn't sell disability insurance anymore. But more often than not, we find agents that have been in this business less than 5 years, when asking their prospects or clients, do you have disability insurance? I mean, it's quite that blunt. They would just ask, do you have disability insurance? And the client typically would say, yes, I'm covered at work. And the agent would walk away. Well, let's talk about another subject. What about life insurance? You got that taken care of. Folks, I'm here to tell you that you're starting to unwrap the package when you ask that question, but you stop unwrapping the package when you move on to the next product line. When the prospect tells you that they're covered at work, that's a wonderful opportunity for you to ask a very provocative question. And the question is this. Well, first a statement, then a question. And the statement is, well, that's wonderful. I mean, today, did you know that less than 23% of employers provide any type of disability insurance for their employees? I applaud your employer. But that being said, I need to ask you a very critical question, because my role is to eliminate risk. And unless this question is answered correctly, there might be some risk, even though you have coverage. There might be some risk out there that I'd like to share with you or I'd like to talk to you about. And that question is this. When is 60% not 60%? And they're going to look at you cross-eyed and they're going to say, what are you talking about? That sounds like Greek to me. And you're going to say, well, look, again, thank God you got an employer that's benevolent enough to give you disability insurance coverage. But I got to tell you that when that employer pays for that coverage with the insurance carrier, guess what he's going to do with the premiums? He's going to deduct them. And if he deducts that premium, the benefit becomes taxable, which means that even though that benefit is 60% of your income, it's going to be taxed, which means now we're talking 40% of your income. Now, folks, write this down. This is your follow-up question. So, John, with that being said, let me just ask you a second question, and that is this. Can you stay in your world on 40% of your income? And if you can, I'm done. If you can't, you've got a problem, right? Wonderful, wonderful bridges to broach the need for disability insurance. When is 60%, not 60%? Can you live in your world on 40% of your income today? And if not, you have a serious problem. Okay? So remember that, folks. That's a good way to segue into this product. Well, Ben, I'm going to throw it back to you, folks. Thank you so very much for giving me your valuable time to check into our webinar this Wednesday morning and to learn about what we think a very, very wonderful and exciting entree into selling disability insurance to many, many folks throughout the country with various types of different associations. Ben, back to you.
Dan, thank you for another wonderful and very informative presentation. Folks, let me just echo, some of the things that Dan pointed out. This was a great presentation in regards to overall talking about associations, how you can get involved, how you can become the endorsing agent on an association and provide that discount to those prospects and those clients. So that was wonderful, but at the same time, as I was sitting here listening, and I hope you took some of the same things away that I did, is that there were a lot of different sales ideas that were very simple that Dan pointed out, and those are always great little tidbits. So if there's one thing that we like to do, or what we want to achieve from these webinars, is for you just to walk away with at least one great idea, whether it be a sales idea or if you learn something new about the disability industry, whatever it may be, something that you can go out today, and when you're talking to your clients and your prospects about paycheck protection, you can use that. We want to help you. That is our goal, is to educate and provide you with as many sales techniques and sales ideas as possible. So I definitely got a few, so hopefully you did too, and hopefully you wrote down a couple of those key points that Dan made. So that being said, the association packet will be provided to you today as a courtesy for joining us on this webinar. So keep your eyes peeled for in your email. About an hour after this presentation, you're going to receive the lucrative association power pack that will mirror the presentation that Dan put on today. It'll go back into detail reviewing the criteria that's needed, targeting those prospect associations. We want to help you get out there and get your own association that you can endorse. And as we mentioned, there's also a generic association letter and one specifically for the physician marketplace. So that will be included too. So thank you very much for attending today. As I said, this was the inaugural association webinar. I think it went very well, and it's very fitting because it is Disability Awareness Month. So Dan, before I sign off, well, actually, before I throw it back to see if there's any questions, I want you to take a look at our website. If you guys have any further questions, you can give us a call at the 800 number at the bottom of the screen, or visit the website where you can obtain a lot more information, marketing materials, listen to recorded webinars that we've done in the past in case you've missed some, or if you really enjoyed this one and want to, get some more sales ideas or learn some more about paycheck protection, check those out. So it's a full-service website, very user-friendly, geared specifically towards you, the agent, the broker, or the advisor. So please look into that. We look forward to hearing and seeing you guys on the next Wednesday webinar. As always, this is our pleasure. Before I do sign off at this point, Dan, I do want to see if there are any questions that we have time to answer on your end.
Thanks, Ben. Appreciate that. Mailbox is kind of full right now with tons of questions. We don't have much time. I do want to take a stab at a couple of them. First and foremost, Steve, you are asking the question that we need a letter from the association that is identifying the producer and the company that's going to be endorsing that association and providing benefits. and discounts, and you go on to ask, well, how do we know which company is the best fit and what company is going to be on that letter? And Steve, thank you very much for bringing up that point. It's a point that I should have included in my presentation. I'm so happy that you did bring it up. Let me answer it this way. We represent a dozen or so DI carriers in the marketplace, and folks, that's about all there's left in this industry today. But what we would want to do is go shoe shopping. In other words, we would want to find the right carrier, and almost all of them provide some type of an association program. But we would want to have a thoughtful discussion with you, understand better what association it is that you'd like to go after, look at the industry, and then match that association to the most competitive carrier that wants to be in that segment or be in that industry. So what we would do up front, Steve, is that we would provide you with a carrier that would best meet the needs of that association in that industry, and then give you their materials, and then start down that path, promoting that company to you or through you to the association. So that's how that would work. Let's see here. Lee is asking, well, you talked about simplified benefits. How much can we get in simplified? Lee, thanks for the question. It could be anywhere from $3,000, depending on the carrier, to $5,000. It just depends on the carrier that we're going with. And remember, folks, that is where the carrier would waive some of the income documentation, the blood and urine, the pyramid, those types of things. Let's see, Joe, you're asking, with Chamber of Commerce's, what participation level would be needed to implement a program? I came to the call late. Good question. What we're looking at, Joe, is generally speaking, most carriers are going to want to see activity. So they don't get too hung up on, having the requirement of writing 100 applications a year. I know that there are some guidelines out there where carriers want to see, 10 to 25 applications a year, but the most important thing is activity. As long as there's activity and there's applications that are coming in from an association, you will never have to worry about an association canceling that, or excuse me, the carrier canceling that association endorsement. Now, there are things that go beyond that, like the state of the industry. They do reserve the right to cancel any association endorsements that they want, but not if you've got a steady flow of applications, participation is not going to be an issue. Yeah, and the questions just keep coming. So what I'm going to do, we're kind of late, folks. We're pressing our luck here by keeping you on the line. I just want to close this by, again, thanking you for taking time out of your busy day. We never know who's going to be disabled, but the more conversations that you have with your clients in prepping them for the need to insure a potential disability, the better off we're all going to be. Well, folks, we hope to talk to you again next week when we resume our Wednesday webinars. In the meantime, if there's anything that we can do to help you, feel free to call us, and we shall talk at that time. Take care. Bye now.